Good afternoon and welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I am Vamakshi Doria and with me is Vivek Iyer. Vivek, it's red across the screen after we had an exciting session yesterday. The broader end of the markets is also taking a very sharp knock in trade today.
That's right. Good afternoon, Vamakshi. So, one thing we need to keep in mind is the fact that markets on par for course. The markets would have taken a bit of a breather post the stellar rally that we've seen. Strong reactions coming into quite a few of the earnings that have come about and quite a lot of news developments as well in today's trading session. So which is what we are tracking in today's trading session. We have a lot lined up on the show today, especially in terms of managements too. So let's start off with the top headlines. CCL products in focus after reporting their Q4 FY25 numbers. Revenue surges 15% while EBITDA up 38% on a year-on-year basis. The management tells CNBC-TV18 that their FY26 guidance is lower owing to a higher base.
Shares of Cummins India correct 5% after its parent company withdraws its guidance for 2025 on tariff uncertainties. The Indian power generation business has also seen an 11% decline in revenue in the quarter ended March 2025.
Yes Bank comes off days highs after sources tell CNBC-TV18 that reports of Japan's Sumitomo Mitsui Banking Corporation taking a 51% stake in the bank are incorrect.
Stocks drift lower as concerns over US trade resurface. Realty and PSU banks are the big losers while auto and FMCG eke out gains. Well, it's a wobbly day for the markets. The Nifty as of now is somewhere around the 24,390 mark, trading with a cut of nearly 1/3%. The Nifty Bank too is down close to 1% in trade. Most of the sectoral indices too seeing significant pressure. The Nifty PSU Bank specifically trading with a cut of over 2%. The Nifty Realty too continues to languish in trade. But on the flip side, the Nifty Auto is doing quite well. The broader end of the markets, they continue to remain under pressure. The Nifty Midcap Index is also reeling under pressure, down almost 1.5%. The Nifty Small Cap Index as well down close to 1.6%. But lots of movers in trade. In our special segment Midcap Movers, we now have Hormas to take us through the midcaps that are moving around in trade. Good afternoon, Hormas.
Good afternoon, Vamakshi. Not good-looking screen for the broader markets, isn't it? Both the mid-cap and the small-cap index at the lowest point of the day. But just to buck the trend a little, we'll start off with some of the gainers then in the broader markets, and they'll come up on your screen because they are the ones that are still in the green despite the mid-cap index being at the lows of the day. And Poly Medicure is one of them. Even as the mid-cap index is at the day's low, that stock is at the day's high, 8% higher for Poly Medicure. Godrej Agrovet, after that upgrade coming in from Kotak, calling the recent sell-off as unwarranted, is clawing back some lost ground after the hammering it received post the results. Newgen Software and CEAT2 having a good day at the office. Earnings reactions, of course, they are on both sides of the spectrum, but CCL products, as you just mentioned, still slightly off the highs of the day, still holding on to gains of around 13%. Indian Hotels at the lows of the day. Cummins has clawed back a lot of lost ground. At one point was down 8%, now is around 4.5% lower, but CAMS has now declined to the lowest point of the day, 4% lower there as well. Well, PSU banks, as you highlighted, are sulking in today's trade, and that is ahead of Bank of Baroda's results later in the day. All of them at the lowest point of the day, losses anywhere between 3.5% to 5%. Stocks that are doing well on the back of volumes in today's trading session, some volume-led movers. RR Kabel continuing to build on from yesterday's gains. Yes Bank at one point was up 9%, is now down, is up around 1.75%, and Tejas Networks is up 3% with very strong volumes. And lastly, stocks that are not doing well in today's trading session other than the earnings reactions. Look at Sonata Software is down 5%. Paytm ahead of its results is down 4.5%. Railtel after its results was among the top movers earlier this yesterday, but now is giving up some profit booking. And Star Health, an IPO price of 900, now trading at 360. Back to you guys.
Thank you so much, Hormaz. A comprehensive list as far as the movers are concerned from the broader end of the markets. You mentioned RR Kabel, second straight session of gains. It's Pia Polycap just reported its numbers, a good set of numbers, a beat versus the CNBC TV18 poll, and that stock too is doing quite well in the session, 2.5% higher for Polycap. But it's now time for a short break. The management of Epigral joins us next to discuss their Q4 numbers and more. Welcome back to Midcap Radar. Well, the sulking continues, especially as far as the broad end of the markets are concerned. Small cap, mid cap index, both of them have lost significant ground today, 1.4% each. A lot of uncertainty, especially with regards to earnings as well as management guidance. Well, a couple of stocks on the radar. First on the list is Exide Industries. Exide Industries, remember, the company delivered their numbers a couple of days ago. The company had a conference call today where some positive management commentary was highlighted by our colleague Sudarshan. Sudarshan mentioned that the management in its commentary said that the partnership with Hyundai is progressing on track, on schedule, and the company is also in talks with two clients as far as the battery manufacturing is concerned. Post highlighting and post the conference call, the stock has perked up and now trading near the day's highest point. We did mention Polycab, but another stock in focus today is going to be one from the capital goods pack. Vamakshi, you've been tracking CG Power quite closely. What should we expect today?
Well, absolutely. CG Power is set to report its numbers today. Keep in mind that over the last 1 month, that stock has seen a very good run-up, up almost 17% so far in the last 1 month. But today, the stock is taking a bit of a knock in trade today, down nearly 0.3%. But despite that, when we look at the numbers, revenue is expected to come in at 2,752 crores, an uptick of almost 26% on a year-on-year basis. The margins too are expected to improve by almost 64 basis points to 13.5%. The net profit too is expected to see a very good growth of almost 25% coming in at close to 300 odd crores. Largely, when we look at the order inflows, they're expected to be better. 3,752 crores on an average is what the analysts are penciling in. The order book is also expected to be very healthy, and it is expected to come in at 10,126 crores. As far as the segment-wise performance is concerned, the power segment is expected to post better growth as compared to the industrials business. Power segment is expected to post a growth of almost 32% as per Nomura estimates, while the industrial segment could see a growth of almost 17%. Let's also look at what are some of the important factors to watch out for. Con call is scheduled for the company at 3:30 p.m. later today. The demand outlook for short cycle products, we will be keeping an eye out on commentary that comes through on this front, and an update on capex plans of the OSAT business is also expected to come through. We'll be keeping an eye out on CG Power. Strong set so far, Vivek.
Well, thank you so much, Vamakshi. I know you track this particular name quite closely. Absolutely flat going to the results. So, there's going to be, depending on whether it meets or beats expectation, can expect an up move either side or a down move on the other side. Well, the other stock in focus is one from the city gas distribution space, and MGL is expected to report its Q4 numbers today. Sudarshan yesterday told us about how its peer IGL had hiked prices. What should we expect from MGL in today's earnings?
So beside the price hike, IGL had also reported the numbers last week, and those numbers were very strong. And now MGL is going to report its Q4 FY25 earnings, and it's likely to be strongest amongst all the city gas companies. We are expecting that company may report that margin expansion might be seen on the back of the recent price hike the company had taken, and the price hike taken by MGL was the highest if you compare with the price hike taken by other city gas companies. Now, if you talk about the headline numbers, their profit may slip 6%, while revenue may increase by 1%. EBITDA may too see an increase of 2%, and margin can come at 18% if you compare against 17.9% last quarter. Now, if you talk about the operational details about the EBITDA per SCM, which is the important metric for any city gas company, and their EBITDA per SCM, or say realization, is seen increasing 5% sequentially, and it may come around rupees 8.73 versus rupees 8.30. On the volumes, volume would be very watched closely. If company manages to hold on to volumes that it had seen in the previous quarter, despite the price hike, it would be taken very positively, and volumes are seen flat sequentially and up 12% year-on-year. In the commentary, what exactly would be watching for? First, if there is any commentary related to recent announcement by Maharashtra cabinet that it has approved EV policy. If something company has heard from Maharashtra government, because Delhi government also had released draft policy related to transition from CNG to EV, which its Minister, Transport Minister, had declined those details. But we'll have to see from hear from MGL management if there is any update related to Maharashtra EV policy. Also, what is if companies looking to take further price hike to protect margin. But as far as earnings are concerned, we are expecting a very strong set of earnings from city gas companies. Also, remember that internals that you had seen in Q4 FY25 have changed drastically in Q1 FY26 to positive.
Thank you so much for that, Sudarshan. Indeed, a strong set that you are expecting from city gas distributor companies, but MGL as of now reeling under a fair bit of pressure. But moving on, let's also focus in on Epigral. The company has reported a decent performance in the fourth quarter with very strong revenue growth led by derivative products. The board additionally has approved capex of 780 crores for doubling its CPVC resin and EHC capacity. The company's chairman and MD, Maulik Patel, joins us now. Good afternoon to you, Maulik. Thank you so much for joining in with us. Let me first start off by asking, 32% year-on-year growth in the revenue. You've also posted 11% year-on-year growth in the volume. So largely, when we look at the growth, was it largely led by pricing or was it a change of mix? And going into FY26, what are your expectations?
So mainly the growth in this financial year, last financial year, it was because of the CPVC and ECH expansion, what we did 2 years back. So this was the full year where we utilize maximum capacity of the CPVC, what we have expanded last year, and CPVC compound of last year. And ECH, which we have commissioned in 2 years back, I think it was the full optimum level we have utilized in the last financial year. So major capex, what we did in last 2 years, I think because of the volume, this growth is coming to the company.
Okay. Mr. Patel, also give us a sense, we want to talk specifically about the derivatives as well as the specialty segment.
Right.
FY25, what was the contribution? We understand by FY28, you expect this contribution from this particular segment to increase quite significantly. In the call yesterday, I think you've given a volume guidance in the range of 15% and EBITDA margin guidance in the range of 25%. If you could reiterate that guidance for us, and where do you see growth triggers in FY26?
So if you see last 3 to 4 years, we are continuously expanding on the derivatives and specialty side compared to our chloroalkali side, our expansion. So continuously we are doing it, and the volume is increasing is on the derivatives and specialty side, including the CPVC, epichlorohydrin, hydrogen peroxide, and the chloromethane. Now the future capex which we have announced is also on the CPVC and the ECH side, which will commission in the first half of next financial year. And that will add on our right now our market share is not market share, but the percentage which we are getting a revenue from the specialty and derivative side in this financial year, we have reached up to the 55%, 54% from the derivative side, which will increase further down the line after 2 years. Once we reach the optimum level of CPVC and ECH expansion capacity, it will reach to 70%. So our ultimately revenue mix will be 30% from the chloroalkali and the 70% will be on the derivatives and the specialty chemical side will be there in the future.
Sure, and generally the margins on the derivatives and specialty business, that is better than your other segment. So what would be your margin outlook going forward? Right now your margins have actually improved to 28% or so. So going forward, when your mix also moves towards the derivative side, what is the kind of margin you're expecting?
So as a company as a whole, we are giving a revenue guidance in terms of the EBITDA margin. We are giving almost, it is going to be around 25% plus or minus 2%. It is going to be there going forward as well.
Okay. So 18 to, could you come again with that number?
It's a 25% plus or minus EBITDA margin will.
EBITDA. So you expect EBITDA margins to moderate despite the rising contribution from the derivative segment. Is that accurate?
Yeah, that's right. Because, last couple of years, the chemical market globally was on the downward. So the feedstock cost, the feedstock raw material cost was on the lowest side. That's why we are having a little higher percentage of margin. But going forward, I think we are expecting the rise, the price of the raw material will increase. So that's why we are giving a guidance in the long term. We are giving guidance of 25% EBITDA margin only.
Sure, and you've also announced a capex 780 odd crores that is expected to start contributing from FY27 onwards. So you just give us an idea, what would be the kind of incremental revenues that will come on stream once this capex is commissioned? What is the kind of demand that you're seeing to support the kind of capex that you're undertaking?
So over and above the CPVC and ECH, what we are expanding in current financial year, we have also commissioned the chlorotoluene and chlorotoluene, which is also import substitute and first time in India. And so we are expecting we are going to achieve the revenue from all these three projects: chlorotoluene, ECH expansion, and the chlorotoluene, the CPVC expansion. We will get an expected revenue around close to 1,200 crore kind of thing once it reach to optimum level in coming times.
Understood that. Maulik, also give us a sense. We understand that in the quarter gone by in FY25, caustic soda actually was quite volatile, but Q4 you ended caustic soda business on a strong note. FY26, how do you see pricing pan out? What is the current capacity utilization? Do you feel the need to expand facilities over here?
So the caustic soda side, it is a strong demand globally because of the alumina and the nickel, which is used. Okay. Nickel derivatives also used in the EVs and in the electronic application. So both the metal is going to remain strong, and the major consumption is caustic soda. So it's caustic soda, we are hoping in the current financial year, even in the next financial year, it is going to remain strong. Only the chlorine derivatives is on the downward side. That's why the chlorine expansion, we are continuously doing in-house consumption going forward. So once we expand all CPVC, ECH and everything, our 90% chlorine consumption will happen in-house internally. That's why we are able to ramp up our efficiency of the chloroalkali production close to 85 to 90%, what we are right now at 80% or 75 to 80%.
Sure. And, what is the mix between the domestic revenue as well as the exports? And is US a significant part of your exports?
So currently we are exporting majority on the European side. Currently we are exporting to only 10% of the company's revenue. We are more focused on the domestic growth, which is more on the infrastructure, windmill, the renewable energy and the automotive sector side. And that's why we are adding the chemistry, or we are doing expansion which use in this three segment currently. And long term, we are very bullish on the domestic side rather than the export side. But yeah, there is an opportunity, but I think clarity of the US on the tariff is not yet come. We cannot take a long-term call based on the current situation because many people are expecting that it will change frequently after the negotiation with the individual countries going forward. So currently we are not able to take a call based on the US, but yeah, of course, there is opportunity in the US in many chemical sectors right now, including what we are manufacturing right now. But I think it is difficult to comment on the long-term strategy about the US market right now.
Maulik, one last question. Request you to keep your answer a little short. Well, that's an evolving situation and we are all tracking it. Well, you spoke about capex for doubling, both CPVC and ECH capabilities. FY26, can you confirm if the capex required is close to 450 crore? So how are you funding this capex? What does it do to your debt? You've also given a guidance for reducing debt to EBITDA. So give us those numbers, please.
Yeah, so currently we are going to manage all the capex. What we are planning to do in current financial year is mainly from the internal accruals, and if we required for the short term, we will raise from debt from the bank. But most of it is going to be from the internal accruals only.
Sure, got that. Well, thank you so much, Mr. Patel, for joining in with us. We hope to connect with you sometime later again. But as we slip into a very short break, here is some good news for our viewers. India's business news leader is only a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen. Welcome back. You're watching Midcap Radar on CNBC TV18. From one management to another then, Techno Electric is on our radar now. Stock has been under pressure this year. They are in the news because of the launch of their new arm, Techno Digital Infra, with an investment plan of $1 billion and cumulative capacity target of 250 megawatts. To talk about more on this development and outlook here onwards, Ankit Saraiya, Director and CEO at Techno Electric and Engineering, joins us now. Well, good afternoon to you, Ankit. Let me first start off by asking about the kind of opportunity that you see in the data center space. This is a very hot market right now. So what is the kind of incremental revenues that you're penciling in from here?
Yeah, our venture into data centers started somewhere around 2021 with our first data center coming up in Chennai, about 36 megawatt. We are commissioning the first phase in a month's time, which will be approximately 5.6 megawatt. And the reason why Techno Electric got interested in this segment was obviously the potential that we see in the digital infrastructure space with growing digitization, focus on Data Protection Act by the government, and also for Techno Electric, it made sense since data centers largely run over the raw material of power, and Techno Electric understands the subject of power real well, given that the parent company has been part of power sector for almost 4 decades, and that got us excited. And we see great potential for data center industry going forward. We see it growing at least 16 to 18% CAGR, even after given that it's a high capex industry. And our program is to deploy $1 billion behind this industry, develop approximately 250 megawatt or more within the next 5 to 7 years.
Right. Ankit, thank you so much for joining us. The first thing which we want to understand is we are trying to wrap our heads around this particular announcement that you've made. Techno Digital Infra. So is this a fresh arm of the company? Does it include the already existing data center business? So like you mentioned, the Chennai data center, the first phase is coming up. And the 1 billion, does it include the capex already incurred, or is it a fresh capex? And if it includes the capex that already been incurred, what is the incremental capex that you will be putting in?
So Techno Digital is basically a platform which Techno Electric launched, which is currently an wholly owned subsidiary of the parent company, Techno Electric and Engineering Company Limited. And what we want to do is develop multiple kinds of digital infrastructure, which includes hyperscale data centers, edge data centers, and so on and so forth. And the existing Chennai data center, or the one which we are coming up with in Calcutta, or there's another one which we are planning in Noida, which are the larger data centers, will all come under this platform. And over a period of time, we would also like to see our edge data centers, which are being developed in partnership with Airtel Corporation, also become a part of this platform over a period of time, and create a massive infrastructure of interconnected, large hyperscale data centers with these edge data centers, so that we can go and bring a proposition to the end user that you can have a data center closer to the consumption point of the user, which will be edge data centers. And also we meet the requirement of large hyperscale data centers across the geography of the country.
Ankit, at the end of Q3, you had mentioned that you were in discussions with multiple international as well as domestic partners, as a tie-up into this particular data center foray. At the end of Q4, what is the status of these discussions? We also understand that you were in talks with a large domestic PSU bank, for a foray in the data center business. Has any of these talks reached a fruition?
So the talks are ongoing and very encouraging. We are in discussion with multiple strategic partners. So from very beginning of our journey, we've been very specific that we would like to engage with a strategic partner that can add value to our foray into digital infrastructure space. And that's what we've remained focused on. And we continuously remain engaged with multiple such data center operators across the globe. And we feel confident that as we are growing in this space, we are creating an infrastructure which will be exciting for multiple such operators to engage with us and form partnerships of different nature, which can help us continuously grow in this space.
Well, Ankit, let's also get some, guidance, some numbers out of the way. You'd shared a guidance earlier, order book of almost 10,000 crores, top line of 2,400 crores in FY25, increasing to 3,600 crores in FY26, with margins of 13 to 15%. So is this guidance still intact, or is there an upside given the kind of announcement that you made right now?
We would love to speak on it, but the problem is that we are currently under silent period, given that we are coming.
Qualitatively, you're on track?
Yes, you can say that.
Okay. Ankit, you're very much present as far as the power EPC space is concerned. And, the government has constantly been talking about an 8.5 to 9 lakh crore opportunity as far as this space is concerned. Players also have told us about significant bottlenecks, especially when it comes to renewable energy offtake. You are present in substation EPC construction. What exactly is happening on ground? Are there delays when it comes to actual execution of projects? And secondly, a lot of players have told us about a shortage of transformers. Are you also facing the same?
So, right, you may say the space is very, very exciting. Wherever there is challenges, there is opportunity. And we feel that there's immense opportunity for companies like us, which have been delivering projects largely focused on substation, because with increased renewable energy, with increased focus on renewable energy, what it does, it multiplies or exponentially grows the requirement for substations. If conventional power requires 1x of transmission capacity, renewable energy requires 4 times of it. And that's the reason why we are seeing the thrust. And also because of the sudden capex plans which have come into this sector, it has made the sector reach an inflection point where the supply chain is a big constraint, whether it is transformers or whether it is other equipments that go into a substation business or EPC business. And therefore, it is challenging to meet project timelines. But having said that, with the experience that we've come with, we try to navigate them for ensuring that the projects are delivered on time. I think there are multiple challenges in the sector which needs to be sorted out, whether it is land acquisition, whether it is supply chain, and especially if we want to deliver on the programs that we are talking. But the focus is there and positively there to resolve them and deliver what is required on the ground.
Thank you so much, Ankit, for joining us. Very good conversation. We hope to have you once again on the channel post the Q4, where we're going to quiz you a lot more on the numbers and on the guidance that you've given the street post Q3. But with that, it's all the time we have on this edition of Midcap Radar, Mutual Fund Corner, when we return.